This one stock can change early buyers' lives. This is not financial advice, but my research suggests it's a good idea to buy as much as possible before November 24th. If you're new to this channel, we've had some significant wins in the power generation sector. Bloom Energy is one example right here. You can see it's a 200% gain right there. There was also a data center stock, A-Lab, with 120% gain called out. And there was also this rare earth company, MP Materials, which went another 60% after it was called out. And this was after it got the $400 million Department of Energy investment. So it's not like I'm just guessing what the government's going to do. Finding momentum and with the help of a community, getting in at the right time. So if you want to take advantage of our Black Friday deal, we do have that $19 7-day trial. This is the lowest price it's ever been. It's available for a limited time. And this ticker, Lemonade, LMND, I believe is well positioned to go up right now. It's an insurance tech company. They help connect customers with insurance companies. They basically run social media ads and have a little bit of AI automation to direct customers to the right carrier. They had $190 million in revenue in Q3. It's up 40% year over year. So they're growing. What they need to do is become profitable. But for our purposes, this is still a good investable idea for the midterm. Let's jump into the chart and a little bit about the company.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here's that earnings, 190 million, 40% year over year increase. And their loss is down to 20 million. So that's not a lot. That's about 1/10 of their revenue. So you can imagine if they're able to flip that only to 10% profit, that could be a big deal as their revenue expands up to the high hundreds of millions and billion. Suddenly they're turning over 100 million in profit. And it's very doable because the scale of media, Meta has 3 billion daily users across WhatsApp, Instagram, and Facebook. So the number of impressions they're able to get has to be in the billions. So the company I mentioned being AI first. Of course, every company mentions that. But I do believe this makes sense. AI-driven automation, increasing the ability to handle claims. I don't exactly understand how they're handling claims, given that they're basically just an insurance connecting company. I don't think they're actually making decisions on the underwriting side or on the insurance company side. But they have these massive markets, US, Germany, and Netherlands, that they are participating in. Germany is the biggest in the Europe market, and Netherlands is smaller, but they punch above their weight. And they've got these different types of insurance that are pretty niche. So pet health insurance is a nice niche for sure. Renter's insurance and homeowners insurance sure is a big one, but they're trying to get into car insurance as well. So they definitely have a massive addressable market. As far as the chart, the earnings is pretty solid. You can see the narrowing of that loss in earnings per share. And the company's holding up. It had a pullback, but surfing this moving average, it seems like it could really rocket here. Now, the safest place to buy it is actually up here around this $79 level. Or more accurately, we can see it more clearly here actually. Right here at this 75 and change level, where it actually closed on day one. Well, I'll catch myself. This is actually day one. It released earnings in the morning, closed up here, 78. I'm just saying it did give some back. So you could risk 75 if you wanted to, somewhere in here. So this is very much inside baseball, what I'm talking about. In general, the idea is you buy now. If it goes down a little bit, you sell. And if you hold, you could get $10, $20 or more of gain. But for those that want the specific entry criteria, there you go. As far as competitors, there aren't really public tickers that you can compare them to because this is such a fragmented market. What they're doing, it's not that it's easy, but it does have a low barrier to entry because all you need to do is throw up some ads and then call up an insurance company and ask them if you can sell leads, basically. So people that click on those ads get directed to the insurance company. There hasn't been a huge company in the insurtech space that has exited. And, well, I'm talking about on the order of tens of billions. But that's definitely the goal. And I'm not even sure that LLMs are going to be able to give me the answer here, but every venture capitalist who's invested in this and every stock investor in the public market really needs these growth stories. So this is a private company, and I'm not sure that this is really the best comp, but it might be the only one. These ones are all private as far as I can tell. And if we look at the stock market, really all we have to compare against is other technology startups like Figma, which is just starting out and hasn't been that interesting. So Lemonade's the idea. I think it has good potential. If you like these ideas, hit that like. If you want a free course on how to buy stocks before they go up, hit that subscribe. If you want to take advantage of that $19 Black Friday deal, it's the lowest it's ever been. It's available for a limited time. Go to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.